What's happening, guys? We've got another Sunday Scan coming at you. This time we're going to finish off September this week. It does feel like the months are just picking up pace. It's been week after week after week. The action's accelerating. September is turning into just quite an amazing month. The last 2 weeks have been some of the top of the year. And just the opportunities are endless. They continue to be endless. There's money to be made on all different strategies, all different places. You know, one of the most difficult things for me to adapt to personally is the retail driven, sort of the ape mentality, everybody's doing the same thing type of trades. So for example, DATS and CEI, you know, those are great breakouts, great big moves. But I just have a tough time doing the same thing as everybody else. And my brain's not wired that way. And, you know, typically when things start to get a little bit too retail crowded, I usually am exiting part of my position. So for example, on BCTX, which I will get into a little bit, you guys know that I've been swinging that. And, you know, it started to get a paid promotion from Benzinga. It started to get super retail crowded in a sense that, you know, everybody was talking about, everybody was making it their big pick. And to me, that makes me take a little bit of a step back, reevaluate whether or not I should be in this particular name. But, you know, in this market, I guess it just doesn't matter. It is the new way. It's generational, I feel like, after AMC and GME and, you know, when these big herds come together and make decisions, I mean, it works. And so that's been hard for me to wrap my head around. Just like I said, just because I haven't been wired that way for, you know, 15 plus years. So, you know, I'm coming around to it. I'm understanding it more and more. But, you know, as a trader, there's always room for improvement. And that's something definitely where I could have potentially more trust in. And you know, yes, when you see the volume, yes, when you see the move, understand that, you know, hey, it's not just another, you know, one and done type of trade. So, Stock Quant, for those of you guys that checked it out, that was another amazing week with the information that was provided on there. So, that is an algorithm that my programmer has written. We launched it for you guys to check it out. We have a real-time version within IU so that you can actually see it. But, you know, the options that are on Stock Quant is, you know, the last 15 minutes, the last hour, all day. And, you know, if you paid any attention this week, GOEV was a monster breakout. It was very good at finding some of those SPAC breakout type trades that we've been talking about, the IRNTs, the HLBZs, and all those types. So there's been some really good information that's come off that. And, you know, it's not just because it goes up on the list does not mean it's a buy or a sell, but what it means is that there's a lot of retail interest. There's a lot of eyeballs that are starting to come on these particular names. So if the trend supports maybe a thesis that you're creating because of that, and this tells you that, hey, there's a lot of eyeballs here, then a lot of times I might have a little bit more conviction than I otherwise would. Or if there's a heavy Stock Quant kind of velocity score and it's just staying super heavy, you know that retail is absolutely on the wrong side of the move. They're absolutely on the wrong side, and that, you know, this could actually unwind further than you think. So it's been a lot of great opportunities for sure, but, you know, obviously use it as a tool. Check it out, have it up there. It's a great idea generation tool. It's something that I've used for probably the last 6 months more actively over and over again. So anyway, this week for the Icon meals, Save for Blood, you got the Icon meals for this week, or for this month rather. If you are US based, if you are not, we can ship you out something else. But email me, webmaster@investorsunderground.com, and I will get that situated for you. And then David Gregory, you got the shirt for this week. As you guys know, all you have to do is just like and leave your key takeaway. Leave a key takeaway with the timestamp. That allows others to click that timestamp and hear it for themselves. Also allows my video guide to go back and review what you guys took away as key concepts and then turn them into little micro content so that you guys can hear them again, and maybe it sinks in, maybe it helps you, maybe it helps others. So I do truly appreciate you guys always leaving that feedback because it helps us more than you know. AEHR officially, nice home run, hit 17 after hours, 16 most of the day. You guys know from Sunday Scan, I've been there since mid sixes and been adding and trading around that core, but pretty much a home run. So I just have a long-term position left. I actually sold half of the long-term position given how big of the move was on Friday, but then I ended up re-adding it back. And at this point, I'm just gonna kind of not watch every tick and just see if we go 20 or 30 over the next 6 to 12 months, or if we start to fade off, and I'll make a decision from there. But at this point, I've locked in a majority of the bigger stake, and I'm just holding a longer term position at this point. So let's see, theme to theme. We talked about themes last week, and you saw that a lot of that I guess merger theme shifted into these SPAC, these thin redemption type plays, and coming into the new companies, right? So they go from SPAC into the new ticker, and we've had some really amazing moves for those. We've also had some serious disasters. TMC, a really nice disaster. Unfortunately, I didn't take part in any of the downside, but the writing was on the wall. They had a PR out, and it literally did not uptick very much, just a whole bunch of volume, and then it just kind of faded off. To me, that should have, or it was a sign, and I had actually mentioned it in the room that, hey, they are obviously prepared for this PR. There's a lot of paper that just came out, it feels like. And, I didn't take part in that, but it's very important to understand that all of these trades, we don't have history yet. So they're only as good as their first run until they prove that they're going to hold the next, trend, the next dip, the next base. So be cautious thinking that they have to bounce, because we don't know that they have to bounce yet. We need to see that. We need to be proven. So just like you wait for the tops on parabolic type moves or these big breakouts, wait for the bottom to be formed. Don't anticipate that it has to bounce. So think about that, and think about higher lows. Think about if you let it rally and then puts in a new base, at least you have some sort of support. What if it rallies and it has no base again? Rallies, has no base again. Rally, no base again, right? That would be something like GREE, G-R-E-E. We've talked about that in the room. If you're trading it, 1, don't chase breakouts. 2, sell into rips. 3, the only edge is flushes as long as a base is holding. So flushes along a trend that's holding. And if you've traded that, the idea, the concept, the trade has worked out okay. It's nothing amazing yet, but if you have done anything except that, you might as well just have it off of radar. Next point, looking left and fundamentals. So I'll do looking left last. Fundamentals, a lot of people understand fundamentals now. A lot of people know about filings, whether or not they need to raise, whether or not they have cash, whether or not they have an ATM, whether or not they can just plain old sell paper, right? And where the resistance might be. And I think that it's important to understand that a lot of people understand this now. And the more people that understand it, the more people that come to a conclusion that this should go down, and it doesn't, the higher it goes up, right? We've seen that on so many different trades. And I think that there's a lot of short squeezes created by this concept. And I think a lot of funds know that there are shorts, fundamental shorts, things that just don't make sense, and they're prepared for that. And they want folks to short things down, not sell, and then use their cover as that liquidity event for whatever particular trade is being set up. And so MRIN is a great example of that. This thing has a huge shareholder base, and I have kind of a note that it reminds me of MVIS, and if you guys remember that one, UAVS, there was a bunch of different names, just, you know, normally were like 50 or $100 million companies, and then they went into the billions for no reason, and just an idea. No real revenues, no real anything. It's just sort of this big story from, you know, in 2035 will matter kind of thing. And people buy into that, and you just have to adapt and understand that that is the new way. So I think that MRIN is in the similar kind of basket, and the sooner that you come to this conclusion that it should go down and it doesn't, obviously the more squeeze opportunities we're going to have. So that you saw a little bit of that this past week, Thursday and Friday. It was a phenomenal trade. But if you try to be a hero, if you try to be patient, knowing that, you know, it didn't really make sense for it to hold as well as it did, you got squashed. So I think the best part about this market is there's no reason to take risk overnight on the short side. There really isn't. And you know, I don't think I've really swung many shorts, if at all, in the last couple months. There's just no reason to. And especially if you're thin, you never know if it's going to be the one that pops up $5 or $10 or something like that. So the good part about this market is usually, for the most part, not everything, but for the most part, if you want a particular trade, you know, whether or not it gaps down or gaps up, you still can probably get around the same level the next day. Because even when things gap down, a lot of times they rally back and retest red to green. Or if they gap up, it's a better average than the day before. So I think that's the beauty of this market, is you're not really missing anything by not taking positions overnight. And, you know, on the short side, obviously there's been some nice gap ups and continuation plays on all these swings, but that's the beauty of the short side part of this market, just because each day you're literally met with a gap a lot of times. So the last piece that I want to talk about was looking left, and I think this will help on, you know, things like Zivo this week, ZIVO, if you pull up the prior run and this run on Friday. So I think it was both this week, earlier in the week and then later in the week. But looking left, look at prior levels of resistance. You saw it come right into that resistance level. And again, I would encourage you not to come to a conclusion that it has to stop there, it has to peak there, or has to base there. That's not what you want to do. If you come to a conclusion like that, then, you know, that's when the bias comes in, and there's a good chance that you get on the wrong side of a trade. I personally like to use them as a guide and let it prove to me that that's what it wants to do. So think about that. Same thing with ATER. ATER, we had a phenomenal opportunity this week. And so I had mentioned on, I think it was Wednesday, there was some options that went off. And I've got a bud that literally focuses on all the options flow on these big types of trades. And it's rare that, you know, there's a situation that he says, hey, Nate, you know, this is what I saw. And, you know, the prior one was BBIG, and, you know, that happened right away. ATER ended up flushing about $1, but it went right into looking left support. So like I said in the room, you know, you gotta expect that those levels are going to hold. You might have a bias that, hey, maybe this is the time. This should break down. This last time on BBIG, it broke down. And so because of that, you know, maybe I didn't cover into that flush. However, as it retested back up to the top of the channel, where the short was initiated, if that does not hold, you don't want to be fighting that because everybody's going to be on the wrong side of the trade. But what you can do is take that information and bring it into the next day. And as you saw, they did a share kind of deal, and obviously somebody knew, and it came in hard the next day. So these are monthly contracts. It's not always going to be to the very minute, the very hour, but it's good to know when big money is moving on, when big money is making a different decision. A lot of times people say there's sweeps and different things like that, but these are all small players just to try to get retail excited. With these types of transactions that I post, this is real money, big situational type of trades, more of a macro perspective. So whether or not it's that minute, that hour, that doesn't matter, but when and if the trade comes, don't underestimate it, because now you've seen it. That's marked the top 2 times in a row on these types of big trades, and actually 3 times if you include the IRNT action as well. So that is that. If you guys have any questions, you know the drill, always here to help. Reach out if you have any questions in the room. Traders for a Cause, we are obviously sold out. We sold out in like 2 days or 3 days for the Las Vegas in person. However, there is we are doing a virtual event this year just because the demand was through the roof. So if that is something of interest to you, we will put a link in the description, and I hope that you guys do participate. That's just a small pledge, and being part of it, you'll be able to not only get access to that, but also get access to Project Impact, which is something that is accumulation of all the different events that we've had, and I think you guys would enjoy that. So let's make sure I didn't miss anything. I think we're good there. So some of the questions that were sent in this weekend. Nate, this week was amazing. Had some nice low float, Zevo, HLBZ, MRM that worked well for me shorting the backside, but the locate fees were astronomical, eating half my profits. Can you please share some good hard to borrow brokers? So, I mean, look, this is going to happen all the time, depending on if you only get a portion of the move, if you're patient. For me, the borrow fees, yeah, they definitely have been high over the last couple weeks, but you have to think about what we're trading. We're trading stocks that are extremely thin on some of these types of situations. 2 million, 3 million type float. So there's only so much supply. They can't just make shares up out of thin air. So there's going to be a price for those, but Centerpoint's always great, and there's a few other brokers that we've talked about within the room. I think the most important part of being a trader and expanding is to just always open more and more clearing firms. You're always going to have the best of the best at one spot. Now, Centerpoint has always, for me, it's always been a very central. They have the best of everything in one spot, and I've always had great luck there. Opening other clearing firms, you never know. Maybe it's hard to borrow here. Maybe it's outpriced here, but you might have it easy to borrow here. Maybe you get a better deal here. It's always good to have 3, 4, 5 different clearing firms, however many you can. So anytime that you build an account, to a decent size, pull some out, open another one, pull some out, open another one. And that's been sort of my strategy, so that, if and when none of them have it and one does, it was worth it. And maybe that's only 1 trade per quarter, but as long as you can make it, as long as it's there, it was worth it. So that's sort of been my strategy. Happy to discuss them in the room, different brokers and different places where I would suggest, but as always, Centerpoint is my top notch. Revenge Trader asked, when you short, do you put a cover order in down low so the algo can see it and help walk up the price even if you don't plan on covering at that price? It's not really how trading works. It's not really how algorithms work. So the Cover in itself is actually not, you know, you could choose to hide your order. You could choose to you know, put it and only show maybe 1,000 shares of 10,000 shares, or 10,000 shares of 100,000 shares. So it's not really a situation where an algo decides that it sees your order and it's going to you know, walk up the price or something like that. So I don't really think that that's the way that the market works. I would just worry about focusing on what makes a good trade. Don't try to think about what the algorithm is doing, and really just focus on what is this macro picture, what is this macro idea that I have, and you know, as far as worrying about people seeing your orders and things like that, you know, stops and all that kind of stuff is held on a on your platform. It's not put to the market, right? So for example, if I put a stop in, that is, if certain price hits, do this. And that's not out in the market where they can say, oh, look, there's a stop here, let's go and hit it. That's like a myth. The reason why people think like that is because everybody puts their stops at the same price, right? So everybody's like, oh, they just were coming and they saw my stop, they stopped me out. No, it's just because you put it at the obvious spot. You have to be one step ahead. You have to be one step, build that into your stop, build in this extra room into, maybe trade a little bit smaller and give yourself a little bit more room, right? Because if everybody's doing the same thing, obviously it's going to appear like they are just stop hunting. But I mean, that's essentially what they do because everybody does the same thing. They don't think out of the box. So think out of the box and you know, build in this it's a good word for it, buffer. Build in a buffer to be wrong, right? Let it kind of jump around a little bit. Otherwise, you'll be just like everybody else, and then, you know, talk about how algorithms just sniff out stops and you know, it's all us versus them kind of stuff. How do you know if a trade is just a scalp or should hold for a bigger picture day trade? Sometimes I see a ticker rip, come back to my entry when I hold, and then rip again, so I just missed 2 scalps. Sometimes I hold, it gets closer to my entry and I close out. So it just depends on the trade at hand. Sometimes I will go into a position that's just got some extra volume on the day, extra range, you know, so something abnormal about it. Maybe it's like an LCID, a PLTR last week, even MRIN, where I see a trade starting to set up, and the reason I say I'm scalping it is it's not a macro kind of thought. It's taking advantage of maybe this current pricing inefficiency, meaning in this current maybe 5, 10, 20 minute kind of move, I think it's nearing a peak where I can take advantage of a quick pullback, and it's there. I'm focused on it. I see it setting up, so therefore it's more of a micro trade and not necessarily the whole macro point. So the difference is that I see a big trade setting up on a small time frame, and I want to take advantage of that. Versus I'm prepared for this. It's broke under key resistance. I'm looking for this big picture type of unwind, or it's broke over key resistance. I'm looking for this big picture type of trade. So it's really about sort of anticipating this trade to happen within a small period of time, and then moving on and waiting for perhaps that more of a macro type of setup. There's different setups, right? So if you're taking advantage of that, obviously it does not line up with more of a macro standpoint. So you shouldn't be taking a macro style trade or a macro thought trade with a micro style setup. And it's not something that I like to do often. I might take one of those per day or every other day, but it just depends on what we're dealing with. And if it's a big name you know, sort of doesn't make sense. It's gone up too much. It's too big of a float. You know, these are big names with a huge pricing inefficiency that I would take advantage of because I'm good at reacting into that type of action. If you're not, forget about it. Wait for things and look for the macro. But the easy answer, how do you know the difference? It's whatever you went in for, right? So if you were looking for that quick trade, then that's what your deal. That's your deal. But don't turn that quick trade into a, oh well, I thought it was going to pull back, but it didn't. So I'm going to hold it and kind of, you know, I'll see what it does. That's where you go wrong. Don't turn a micro mentality into a macro. Don't turn a macro into a micro. Same thing. Don't turn a day trade into a swing trade into a day trade. ABCD pattern. Any scenario setups where you would consider less than 2x risk to reward. The IU experience and community has been extremely helpful. Many thanks to you and your team. Thank you, Wesley. I mean, yeah, there's definitely times where, you know, if I'm wrong, it's going to be maybe 20, 30 cent risk. And then maybe if I'm right, it's 20, 30 cent type risk. That could almost be like a scalp situation, like the prior the prior question. But I think that in a scenario like this where I'm taking something that might even be 1 to 1 or 2 to 1 rather than 3 or 4 to 1 or something like that. In a situation like that, it's more of a how good are you at that particular setup, you know, and if 80% of the time you're right in a situation like that, or 90% or whatever the number is, then maybe it's okay to take that subpar setup if you're familiar with that, and that's, you know, you see the trade setting up. You know that answer best. I think it's always important to focus on, you know, the best. You know, you see at least a 3 to 4 to 1 type of potential, but the thing is if it's subpar, if it's not, if it's more of a 50-50 or 2 to 1 or something like that, like you're suggesting, you can always start in. You always take a partial position and then scale into a little bit more, And I've had this conversation a lot lately where, you know, a lot of times I start in smaller than you think. I let it prove, scale up, let it prove, scale up. So you turn what was once maybe a, you know, 1R, 2R, 3R type thing into a 10 to 20R, whereas my P&L is 20x what my risk was, or 30x, 40x, whatever, because I'm scaling in as I'm in the winning trade. So what started out as a very small risk, I'm adding into this winner, and it turns into a major winner. So that's how I would typically deal with a situation like that if it's subpar. But you feel, you know, you've been trading well, you see the setup, it makes sense. It's not, you know, 100% A+, but you still want a little bit of skin in the game. Put it on is what I do. And if I'm right, I scale into it. If I'm wrong, that's okay. I've only got a starter on. I've only got a feeler on. And so that's pretty much how I trade a lot of times. You know, I focus on scaling into 2 names most of the time each day, but I'll put on 5, 6, 7 different names at times. But it's just kind of getting a feel for which ones I have a good read on and then scale into that particular trade. Last question is, I see you frequently talk about a buyer in the tape. How does that get on your radar, trade ideas, etc.? And how do you identify it as a buyer in the tape, something other than level 2 versus other momentum? So typically two different scenarios here. So one would be PALT, for example. You could go back and look at the intraday chart on Friday and had mentioned that there was a buyer in the tape. And so pretty much all day, just a steady bid. Constant buying pressure. So that could be a TWAP buyer, VWAP buyer, or TWAP, VWAP, where, you know, I could set that. I could set, I want to buy 100,000 shares before the end of the day. And it's just a constant, you know, steady buy. AEHR, I would say the same thing, where they probably had, somebody was probably accumulating a position using VWAP as a, you know, a VWAP buy. And there was no rush for them. They were just were trying to get as close to the VWAP level as possible. And by the time the day finished, they had a sizable position throughout the day. So I look for that on an intraday basis where there's just this constant sort of buyer present. And every time that I mention that in the room, if you look at the chart, you'll see that it's very similar on an intraday basis. On a daily chart, what I'm looking for is sort of the wicks. And every single swing that you've seen me take, even AEHR, where that started was because there was a buyer on the tape, and then the wick started to kind of come in there. So if you think about somebody taking a position over 5 days or a week or maybe 2 weeks, whatever, what would that look like? You have this first transitional day with a ton of volume, and then the next couple of days, there's somebody that's in the tape every single day. So if it dips, but the overall end game is accumulation through the day, you're going to see that dip, come back, dip, come back. You'll see those wicks on the daily. So that's exactly why EEIQ, which is a current swing, you've seen that from the 350 idea, sub 4 idea. You've seen what's kind of happened with that over the course of the last week and a half. So that's what I look for on that. Let's get right into scan for the week ahead. All right, guys. Once again, I am not a financial advisor. These are not buy or sell recommendations. These are all my ideas, what I do, how I prepare, and what I look for the week ahead. If that makes sense to you, you want to learn, you want to get an idea of what makes a good trade to me and what doesn't, then watch. If you are looking for buy or sell recommendations, turn it off, go somewhere else, find somebody else that'll tell you what to buy and sell, because that's not what I'm going to do. All right. Let's get started. NAKD. Underdollar stocks are going to start to get a little bit more power. Obviously, CEI went nuts. So, everybody always calls next. That's just usually what happens, right? Everybody, there's one big move, and then everybody has the quote-unquote next, whatever stock. So we're going to go through that process, just like IRNT. The next IRNT is this. The next merger play is this. It's just the way that the stock world works. So, you saw a lot of people call this the next CEI. I'm not interested in calling it the next anything, but what I am interested in is the PR that they had and basically the forward-looking kind of catalyst in event. What we know is that 75 has some daily chart resistance. So that's obvious. I mentioned that in the room on Friday. So that's going to be a key level. That's going to be a key level. We should assume that the 75 level is going to peak out. And if it does, then it will continue to stay heavy. It rejected on Friday, and then it ended up coming in nicely before ramping back after hours. So that was a great idea to potentially downsize from the 66 kind of range accumulation. Then it allowed you to reaccumulate if you wanted to. But I think for the week ahead, the 75 level is going to be key. I do think that if 75.80, if we wake up to a big gapper and it's over 80 cents, I think that a lot of people in their mind will start saying $1, $1, $1, $1. That's just how things work. If it stays heavy at 75 cents, realize that. And I don't think that anybody should be forcing a trade or thinking that this has to do anything. I would let it prove. But we did have 300 million shares traded. It was a good first day. I did like how it goes up, it comes back down, lets everybody out that wanted to sell, and then it ramped up after hours. Whether or not it continues, we'll see. 75 key level. I'm currently positioned from the idea on Friday. I had sold some into the resistance, and then I reaccumulated some as well. MRIN. I think that 11 is going to be a key area. You can see just by drawing sort of a line across, maybe not so much up to 11, like 1080s, but with that, I'd like 1080s 11, give a little bit of a buffer. I'd love to see a gap up, parabolic through that level, and then fail off. But, I think that this is very similar to BTBT, MVIS, and all these other ones where it's obvious. We know where it's going to end. BTBT, we knew where it was going to end at 20 bucks, right? But it was such a difficult trade because everybody wants to trade the same thing. Everybody wants to nail the same move. Once everybody gives up, that's when the moves come in. So very similar to that. I think MRIN is going to offer a fantastic trade, but don't be part of the exhaustion like everybody else. Right now, it's a great trader. You nail the move, you move on. There's a lot of people that are positioned in looking for a bigger trade. So I would be cautious being part of that because you will be part of the exhaustion crowd. GOEV. This one was on stock quant for 2 days in a row, top spot, and just a beautiful breakout. I am looking for either a weak open, 880 base, and then continuation, or some sort of gap up, retest Friday's breakout level, parabolic level there, 940, 950 range, and then sit back. That would be ideal. UPST. This is sort of a perma watch for me. I think that we're going to have a big trade here, just like MRNA. If you guys remember when I started to monitor this thing for the big trade that ended up coming, I'm doing the same thing here. That doesn't mean today, that doesn't mean tomorrow, whatever. But I'm staying familiar because the day that it does pull back, it's going to be $30 per share. Do we go to 350, 360, 400 first? Maybe. So I'm not looking to jump in front of it. I'm not looking to find the top, but I am looking to find the day that it breaks away from what it was doing on the way up and be able to take advantage of that. So it's going to stay on a heavy focus for me. Next section is failed follow through. Once again, I try to remind you guys, but if you click through the description, you can go to the blog and you can see I write out my thoughts on a lot of these trades. As well as, obviously verbalize them now. But you can see the charts, you can see my thoughts, and I put them in different sections. So this one's under failed follow through. So basically what I'd be looking for is, some sort of continuation, like push, and then looking for it to fail to follow through. Fail to follow through with momentum. And once it does, I'm going to be looking to fade that trend. Key levels for me, I think it's pretty obvious, 320s right there and 340 range. It's in a tight channel. So I'd want to see it pop through one of these and then fail under one of those. Otherwise be cautious trying to figure it out in between. CEI continues to be a fantastic trader. This one came back from the dead. So we talked about it last week where I felt like the volume was going to fade off and, potentially the trend will fade off. And so we started to get that. You saw it crack and we went back into the 140s. So we had two really good opportunities where it flushed to the 130s and it flushed to the 140s from that 180 exhaustion level. So it exhausted over that 3 times and then it faded out and essentially reset the chart. So now, as I had tweeted, the 180 level becomes your key because now that resistance is acting as support so far. It tested a bunch of times and it finally broke through it and acted as support. So at this point, you don't want to step in front of it just like before, and you want to only look for exhaustion type moves like we had on Friday. So that was a fantastic trade into the weekend. Great failed follow through momentum, and the part that I like about fading it is it's just so fast when it gives up. It just is so fast, and it's kind of like the instant gratification trade. So I think that's why I've always liked to fade this type. But once again, if you're fighting this thing, if you don't think that it can go higher, if you continually battle the trend, I think that it's a bad idea. It's always been the same thought process. Take advantage of exhaustion moves or breaks under key levels that hold as resistance. If you're trading it every single day and you're forcing the trade, you're going to get probably beat or at least exhausted. So make sure that you are not, in my eyes, fighting. The volume came back. So after it broke down and we went under those 100 million share, almost to 70, 80 million share days, they put out the video after hours, which in my eyes probably caught some of those shorts that were maybe swinging it. And you know, if I'm just thinking about how, you know, people that might have a bigger kind of picture, non-intraday type of thought process, you know, that's like the first point where, okay, it's finally breaking down. I finally can take off maybe a box or, you know, let this thing fail. And then all of a sudden, after hours, it's back to 160. So that move happened so quick that, you know, I would have liked to fade that trend as well. And then the next day it catches them again and it goes. So, you know, unfortunately there wasn't any E-Trade borrows at that 160 range, 160, 162 range. Otherwise I probably would have participated. But there was some, obviously the next day, there was some on Friday, and it's been a fantastic trader. So any of these, same thing with RWLK, same deal. But, you know, this one just doesn't have as many of the socially driven, crazy meme style traders involved. So, you know, you don't get as much, you know, I feel like CEI has that ape mentality where RWLK just made a similar move, actually much faster. It went up to 270s. But any of these price ranges that have 100, 200, 300 million volume, the opportunities are awesome because you can use a lot of size and it adds up extremely quickly. So the key is just not to fight. Key is to focus on key levels of support, resistance, blow off type moves, failed follow through momentum, and you know, as long as you're not stepping in front and fighting these things, they've been phenomenal traders. I definitely minimized this one for sure. But it was an overall good trade. I traded some off the open, covered into the flush, and then I didn't even bother with it over here, but we had some failed follow through momentum. I started to join it and was able to get a good portion of that flush as well. So next up is continuation trades. GREE, same thing that I talked about. We're kind of waiting for a base to form. So far, we don't have any proof that this wants to hold yet. So far, we don't know if it's going to hold. We are still in sort of bid discovery mode. And I think a lot of people, you know, did an ad. They blow out. Then they say, okay, finally, we're rebounding. If everybody just gets to average down and then it pops up and everybody breaks even, it's not going to work. So there's like this process that it goes through. And you saw it with FLGC. FLGC now ripped. But it took a couple days of this kind of topping process, right? So I actually mentioned it in the room, and I was long and I sold some into the sevens, and then I actually bailed on the trade. I don't have any more, but it did exactly what I was talking about in the sense that everybody got exhausted, right? So I was here and I was up nicely. I sold some, but you know, it was time for a chart bounce. Next day, okay, good. You know, we're back at the highs, close at the lows. Next day, all right, you know what? The prior two times I didn't take it off, I'm taking it off. So I took it off over here. So I felt great this day, and now here we are, we're back over this prior level. So to me, this is sort of that cleanup day, cleanup days, you know, 3 days in a row where they soak a bunch of the float back, they position, then they let the trap kind of form, and then they do the real move with the volume because it's a new clean name. Clean meaning they got everybody out that was going to sell over these 3 days, right? Because I got so frustrated that I was up nice, then back to flat, up nice, back to flat, that on that third chance, I went ahead and moved on. And that's what they want. Everybody else bailed, and then bam, here we are. So same sort of mentality with this GREE. You have to think in terms of that. Everybody's trying to do the same thing. As soon as people give up, wait a couple days, and then don't underestimate when it rebounds. AEHR, you guys know the drill there. Just long-term for me. So far, so good. We talked about the buyer on the tape. I've been there since first gap day over here. Started to scale in based off of the transitional kind of ABCD type chart setup. And that was that. LPTX, no position at the moment. I've been meaning to get there. They did a raise, pretty good pricing. I'd like to take a little bit of a position for long term, sort of using that 350s as a guide. So maybe 320s, 330s, but as long as 350s overall, that area starts to form as a new base, then I'm interested. BCTX I hit upon earlier. So far, so good. You guys know I've been swinging it. It's been on scan for quite some time now. I said I wasn't buying breakouts. I was buying weakness along the trend. It's been on red show, and as long as it stays there, you know, you could continue to have some sort of squeeze out. However, like I said, the things I don't like about it is that it's a paid stock promotion, and there's a lot of retail eyes on it right now, pushing it, which again, I still need to come around and just adapt. That, you know, maybe it's okay that these things happen these days. EIQ, same deal. We've talked about this in depth. The last couple times I said I was swinging it from the mid threes. We got some nice breakouts. We got the transitional day, and then we've got pretty much a buyer in the tape. We've got a lot of working traders out, working size out. We had a swipe up into a circuit this day, and not a swipe, a flush down into a circuit this day, to the point where I was like, oh, I guess I should have sold it. And then all was good, and it's, you know, back up on the high. So very nice breakout there. Last couple, bigger picture, QS, so far so good. This has been a nice idea for the breakout. This type of candle, a lot of times, as long as the market permits, sometimes you see it go right back up towards 28, 29, 30. FSR has been a decent one so far. I've been swinging that one. I had laser with it. I don't have it on scan, but it was underperforming, so I moved on before, you know, it just kind of breaks down. It was pretty much a flat trade. And LCID, nice breakout. Goal was ideally they trap before the weekend and maybe a big breakout this week. If that happens, great. If it doesn't, I'm moving on. But so far so good. Nice opportunity last week. Really big, you know, opportunity on the parabolic, the gap day. Nice short in the room this day, and hopefully we continue to have some good action like that. LICY has been a nice one. I sold most of it, but it did get soaked again, so I'm going to be watching for basically 1050s. If it doesn't want to hold 1050s, I don't want to hold it. And then last but not least, AMHC will be JSPR on Monday. As noted, we could have a liquidity trap situation here, and T+2 situation. The new symbol, JSPR, a lot of redemptions on this thing, thinner than a lot of people think. I like the fact that it gapped up and faded all day, likely left shorts in there. Had a week open on Friday, which was the goal, to accumulate when nobody wanted into the dips. And it was a quiet trade for me. Idea was on broadcast, and closed out towards the highs. Locked some in, but for the most part, letting it work until it does not. So that's it. So if you guys have any questions, you know the drill. Reach out. Always happy to help. Like I said, Traders for a Cause. We have it virtually since there was a lot of demand this year. Like I said, we sold out in 2 or 3 days. So there wasn't much of a chance. If you were away from your desk and you missed it those 2 to 3 days, you know, we only have so much space in Vegas. We like to keep it a more of a kind of an intimate feel where you can actually meet and talk to other people, and it's not just running around with your head cut off. So any questions? See you guys in the room Monday, a week ahead. We're going to end out September this week. So, you know, once again, if you didn't make changes from August, you've got another, you know, week, another couple days to close out the month well and start October perfectly. Be patient. Let these trades come to you. There's so much meat right now. You don't need to find the top. You don't need to find the bottom. And you just need to really be patient and wait for your setups to come to you. And that's that.